This is the exact module that helped me make over $30,000 within under 60 days. Give me just 10 minutes of your time. I'm going to show you exactly how you can go from zero upwards of 5 to 10K per month as a funded trader. As you can see right here, this is all just the P&L for the month and a half that I traded. And also, it's just a tiny little withdrawal sitting right here. Now, not only that, but this helped hundreds of my students turn funded and also get payouts themselves. So without wasting more of your time, let's dive right into this. I'm going to show you guys exactly how you can do this for yourself, how I did it, and that's it. Now, what you need to do is you need to learn a strategy and you need to stick to one. You can't just bounce around from person to person trying to understand how they trade, trying to mimic what they do. You need to learn one strategy, you need to stick to it, and you need to adapt over time. So what I do is I learned supply and demand. I first started with retail, retail being support and resistance, trend lines, all of that. Personally, it did not work for me, and I wanted to understand more in depth how the market truly moved. Now, obviously, every single strategy works, but you need to make it twist into your own way and your own personality. With that being said, you need to understand confluences. Confluences are going to build your confidence in a trade. If you don't have any confluence backing what you're doing, you're not going to be confident, you're going to hesitate, or you're just simply going to lose every single trade that you take. So, with that being said, what I did was I incorporated FVGs, which are just imbalances. I incorporated liquidity and also buys and price action. It's very simple. You need to understand where the market's moving, because if the market is selling and you're trying to buy, you're going to lose time after time after time again. Even if the setup looks valid, you're going against what the market's showing you, so you're going to lose. Liquidity is very important. If you are trading off key levels and there's price action sitting below you that is yet to be taken out, if there's tons of orders built up, you are going to get swept. You are going to get swept. And as simple as that, you need to make sure you're trading off external price action that has already swept prior orders beforehand. Now also, FVG, gaps. You need to make sure that there's a gap sitting on your supply or demand level. Gaps in the market are always going to get filled, so if you don't have a gap on your point of interest, majority of the time it's probably going to fail. Now, if we scroll over, creating a trading plan. You need a trading plan. If you don't have a plan, how are you going to succeed, right? That's like you trying to go from Canada to Texas, right? You're trying to go to Canada from Texas. All the way up top, all the way to the bottom, the United States, North America, whatever you want to call it. You need a plan. You need to understand how are you going to get from point A to point B. If you just simply get in your car from Canada and start driving, you are not going to end up in Texas. It's like trading, right? If you enter a trade without any reasoning behind it, no confluence, no risk management, nothing. It's like putting your chips on black in roulette or red, whatever you want to do. It's a gamble. You have no confluence and no ideology backing what you're doing, so you need a trading plan. Without a trading plan, you will never reach your destination that you want to achieve. I see a lot of traders not even having a trading plan. People come to me for coaching and they simply don't have any reasoning backing anything they do. Or they have a trading plan but they don't stick to it. You need to stay disciplined, you need to stay consistent. Because creating a bulletproof trading plan is going to keep you sane. It's going to make sure that you do what you have to do on a day-to-day basis. Because if you don't have this in line, your habits are going to outweigh what you're doing positively. You need to make sure that your good habits outweigh your bad habits. And if you have bad habits, figure out a way to get around them. Because I bet you, if you are watching this, your bad habits, your routine, you not sticking to your trading plan, if you even have one, is what is holding you back. The technicals are very easy. They're very easy to teach. They're very easy to understand as long as you stick to one strategy. It's the easy part. What the hard part is sticking to your trading plan, sticking to what you need to do. Trading, it's simple. It's not easy, but it's simple, right? It's a hard way to make a lot of money. It's not complicated, but you can make it overcomplicated for yourself because you're not going to do what you need to do. Next, backtesting. Start backtesting. Once you have your confluences, once you have your strategy, once you have your plan, what you need to do is you need to start backtesting. Go on FX Replay, go on TradingView, go back in time and understand your edge, understand what you're actually trading. Make it make sense for yourself and make sure that you gather your data, right? Because if you have no data, if you don't understand your edge, you're never going to be profitable. You can be the most psychologically in line and intact person or trader, but if you don't have an edge, you're not going to be successful. It's as simple as that. People either have an edge or they have their psychology and their mindset in line. They're never unprofitable traders. They're never going to have both. And that's point proven. So make sure before you go into the real market, for you try to make all this money that all of you dream of making, make sure that you understand your edge first and you have all the data backing it. Make sure you know the pairs, make sure you know the session, make sure you know what time of day, make sure you know your average RR, make sure you know your win rate. You need to know all these things, because if you don't, you're going to fall over your own shoes. Next, what you need to do, you need to journal your trades. If you do not journal your trades, you're never going to understand the data. You're never going to understand why you're winning, why you're losing. You're never going to be able to adapt to the losses that you take or fix any common mistakes that you make on a day-to-day basis. A lot of people, they don't even journal. They don't review your trades. Why? I don't know. But you're never going to learn. You're just going to take losses. If you take a loss that fits your plan, it's not a loss, it's just a lesson that needs to be learned. And if you don't learn from it, you need to fix that immediately. Also, with journaling, you're going to understand which entry models and which ways you're trading works more than others. Some entry models might not work as best as other ones that you trade. So make sure you understand that and cross out the ones that don't work as much. And lastly, you will learn your win rate and you will learn your risk tolerance. If you go into a trade risking half of your account, 50% of your account, and you have a 20-30% win rate, you are going to blow that account. Now, if you have a 50% win rate and you risk 0.5%, 1% per trade, you are on the right track. You're going to lose 5 out of 10 of the trades that you take. Okay, that's fine. But now you need to understand, okay, what is my average RR? Am I going for a negative RR? Am I going for a positive RR? Am I going for a 1-to-1? Am I going to a 2-to-1, 3-to-1? You need to understand that, because if you have a 50, 40, 30% win rate and you're going for a 1-to-1, you might not be profitable and you need to figure out how to make yourself actually progress. Now, if you have a 50% win rate and you have a 2-to-1 average RR, you're going to be profitable over time. Stop thinking in the moment and focus on the future. A lot of people are going to take a loss and you're like, oh man, I'm going to take another trade because I want to get it back. You need to understand that your data is backing what you're doing. So if you go against your plan, if you take something random that doesn't fit anything that you're doing, you're going to mess up that data and you're going to fall behind and you're going to blow your account. Now, what you want to do is you want to start a small funded evaluation. You don't want to be trading demo for years. You're not going to have any emotions in line with your trading. You're going to think you're the best trader. You're going to think you're the GOAT, right? You're going to think you're unstoppable. You might be 8 out of 10, 9 out of 10 on demo, but guess what? You have no emotions correlated with your trading. And same thing goes for backtesting. You're not going to see all the candlesticks print live. You're going to see one print, one print, one print. It's way easier than looking at the live market. Looking at the live market is going to give you a ton of experience. It's going to make you learn way more than you do if you're just trading demo or you're backtesting. So for a small funded evaluation, it's going to compound, right? You want to start off with a 25, 50K account. Start learning who you are as a trader, technically and psychologically. Learn your entry models that work the best. Like I said, learn yourself from a mental standpoint, from an emotional standpoint. Are you revenge trading? Are you getting FOMO? Because if you are, you need to fix that, and you can't keep doing the same mistakes every single day. And that's where a journal is going to come into play. And that's especially where trading live or trading with your own money, putting it into a personal account or putting it into an evaluation, that's going to help you, because you're going to understand how to get these external emotions out of your trading and out of your habits. Next and lastly, what you need to do is once you pass that evaluation, you get a payout and then you reinvest. You start small and you start compounding more capital along the way as you progress. If you just go right into the market from backtesting, from demo, all the way to 100, 200K, 500K, $1 million in funding, you are going to blow through that money because you're not used to the P&L. You're not used to seeing these numbers. They're real numbers now. They're not just fake. It's not like you blow a demo and you just, oh, you know what, I'm going to restart. No, this is your real money and you don't want to mess that up. Obviously, you're going to blow a couple accounts in the beginning, but as long as you learn from it and you adapt to it, you will be fine. So compounding and reinvesting your capital from payouts into more capital, more funding, this will limit emotional decisions and distress. And not only that, but this will also help you risk less to make even more. Think about it. If you have a $50,000 funded account, if you're trying to make 50K, you need to make 100%. Whereas if you have 500K in funding, All you need is 10% to hit that 50K mark. So understand that. Don't go for these home runs. Don't try to make the most out of a small funded account. Start small and build, because over time you will get more experience, and not only that, but your emotions will start to simmer down because you're going to be used to seeing these type of numbers. And like I said, this didn't only help me, this helped tons of my students as well. So don't take this lightly. Make sure you take notes on this video, you understand exactly what I just said, and implement it into your own strategy. If you guys need any more help within your trading, if you need one-on-one coaching, click the link in the description below. If you get accepted, you can book a call with me and we'll see what I could do for you. With that being said, I'll see you guys in the next video.